So good morning, everyone. People joining us from Israel, from the UK and further afield as well. And welcome to this morning's webinar on mistakes that UK Olim make with their finances and how to fix them. Some of the references in the webinar are going to be specifically for British Olim, but many of the principles that we are going to cover really deal with Olim from any of the English-speaking countries in the world. My name's Andrew Album. I'm a Senior Wealth Manager here at Pioneer Wealth in Aliya, and joining me is our Chief Investment Officer, Mike Ellis. Just a quick background about who I am. So firstly, I am a qualified advisor in the UK, a senior partner at St James's Place, who are regulated by the Financial Conduct Authority in the UK. It's not particularly relevant to today, except to say that I have 3 decades of experience as a chartered accountant and as a qualified financial advisor in the UK, which gives me a deep understanding of a number of global issues. More relevant to today is that I am a qualified advisor here in Israel, a senior wealth manager at Pioneer Wealth, and we are licensed and regulated by the Israeli Securities Authority, which means we're able to give advice to clients in Israel. Just to say very clearly, so that there's no confusion, Pioneer Wealth and St James's Place are entirely separate businesses and have no connection to each other. This morning's presentation really aims to deal with 2 key issues. The first is the frequency with which many investors allow short-term emotions to undermine or cloud their long-term strategic thinking about how best to manage their money. The second is the mistakes that many Olim make with their finances because they don't spend enough time being advised on or thinking about or identifying the key risks that are involved in Aliya. At the end of the day, wealth management and financial planning is as much about identifying risks and reducing and eliminating them as it is about investment performance and returns. And today's presentation is really about focusing on these risks, the mistakes that people make as a consequence of not thinking about them, and how to solve them if you've already made Aliya, or how to avoid them if Aliya is on your horizon. And the first mistake, and perhaps the largest of all, is that many Olim remain largely invested in their home currency when they make Aliya. And part of the reason for that is they have no experience in shekel investments, or they have no access to an advisor who can offer them shekel investments. And as many Olim know, the cost of this mistake has been immense. As the chart shows, over the last 15 years, as an example, the British pound has fallen from 8.7 to the shekels to the pound in 2007 to the current rate of 4.2. That's a loss in currency of more than 50%. And sterling's not unique or alone in that problem. As this chart shows, every major currency has lost money from peak to trough against the shekel over that period. In fact, according to Bloomberg, in a report they issued a few months ago, the shekel is the only major currency in the entire world that's appreciated in value against the dollar, the US dollar, in the last decade. Whatever currency you've been in, if it's not been shekel, it's been a costly mistake. The reality is, though, that there is one currency that never loses value against the shekel, no matter what happens to the pound, the Swiss franc, the euro, or the US dollar. And the answer, of course, is the shekel. If you have shekel assets to meet your shekel liabilities and shekel income to meet your shekel expenditure, you have no currency risk.
Right. So as Andy said, we see so many Olim who are underinvested in shekel, and if you diversify away from your home currency into shekels, then you can at least eliminate this one variable. And again, it doesn't have to be all of your money, but at least part of your money should be in shekels or away from dollars, away from sterling.
So here at Pioneer, we've got experience and have for over 25 years of managing investment portfolios for clients, both in US dollars and more importantly in Israeli shekel, with a dedicated team of Israeli investment professionals with deep knowledge and experience of the market who know how to invest in shekel assets to give shekel income. Most of the people I meet don't consider themselves to be speculators or high-risk investors. But if you're living in Israel and 100% of your money is in other currencies, you are taking a huge gamble with your financial security. So the first mistake that people make is having no shekel assets, having at least part of your wealth in shekel, generating shekel income to meet your shekel liabilities is a key stage in successful financial planning here in Israel. The second risk, or the second mistake that people make, is an over-focus often on property. Buy-to-let properties, residential and commercial, back in their home country, a portfolio that was accumulated before Aliya. Perhaps it was a good idea when you were living in the UK or wherever, but once you're here in Israel, it really can create a whole host of problems. Some people think that the property is the ideal investment and put almost all their capital into it. What they end up with, of course, is an illiquid asset where the income can be cut off when there are voids. And if you're here in Israel, you've lost access to site visits over time, to a relationship perhaps with a letting agent, and it can become more problematic, that distance, over time. But there are specific issues also that need to be thought about. The first is, for the first 10 years after Aliya, your income would be tax-free if it wasn't property rental income in the UK and you're a British Olim, because your UK property income remains subject to UK income tax. It remains subject to UK capital gains tax. It remains subject to inheritance tax at 40%. That's a huge amount of tax you can end up paying of income, capital gains and inheritance tax on UK rental properties when all of those taxes could be successfully eliminated by moving your money and investing elsewhere. What's the solution though if you still want access to property assets?
Well, too often we see people making the intellectual comparison between property or capital markets, and it's not a question of one or the other, it's a question of both. We believe that property is part of correct asset allocation and not the only solution. So it's a question of allocation. There's no science behind what is the correct percentage that should be in property. A lot depends on the history of the wealth. There are some property-centric families that the source of wealth is property, and they starting from 80% of the wealth in property and need to diversify away. And there are other people who've already had their exit event and they're moving up from zero. So typically we're looking to see approximately 20 to 30% of the family wealth in property, and not a question of 0 or 100.
Just to add for clients though that like the idea of retaining exposure to property as an asset class, but don't want to go down the road of individual owned properties with all the problems and hassles and headaches that come with them, we do for many of our clients add exposure to the global property or even the local property market through different investment strategies, so you can access the benefits of property without being tied to the tax liabilities or the other problems that it comes with. The third problem that many people who make Aliya face is they don't spend enough time delving into the charges and fees that are being levied on their portfolios. And as a consequence, they end up paying charges and fees that are far higher than they should. It amazes me when I sometimes drill down into the fees and charges structure of investments that clients have set up, particularly offshore wrappers in the Channel Islands and the Isle of Man. When you drill down and see all the layers of fees involved, they can really end up being quite considerable, often in the region of 2 to 2.5% a year. That's a significant drag on investment performance. And the basic bottom line is it means far less money ends up in your pocket, far more money is going elsewhere than to you.
There's a lot of empirical evidence that shows that over time, what's important is your asset allocation and your fee level. So if you get your asset allocation right, and then your fees more reasonable, then this will make a greater impact than trying to be too clever along the way. So in Israel, the environment is the market. It doesn't really do initial charges or exit charges unless there's some really specific circumstances. The independence is very important, and that's Pioneer's model. We don't have our own mutual funds, which is typical of the portfolio management in industry. And we're very sensitive to the total expense ratio, whether it's a global portfolio or a shekel portfolio. We are seeing that our portfolios are significantly more reasonably charged compared to the what's in the UK.
Thanks. I do often find when I do this comparison, clients of mine who set up investments pre-Aliya are paying double the fees that they would be paying if they moved their money to Israel and had it managed by Pioneer. That's a significant cost saving. Over time, that results in a significant amount of profit and gain sitting in the account of the client and not elsewhere.
Just to repeat, the Pioneer model is that we're only paid by the client. So that means in the event, and that's typical of alternative funds rather than mutual funds, when we're doing alternative funds and there is some sort of sales commission, it gets refunded to the client in full, and that can alleviate their total expense ratio over time.
The fourth mistake, and this also ties into the problems of using outside of Israel advisors who have no base in Israel, is the risk of leaving your money in an offshore tax haven and then it subsequently becomes stuck or marooned there because you can't bring it back on shore, back into Israel. The Israeli banks these days are very strict about capital repatriation. They need assurance about the source of funds, the legitimacy of funds, and that taxes have been paid on any funds brought into an Israeli bank. So moving your money to the Isle of Man or the Channel Islands or the Cayman Islands can create a risk later on of bringing the money into Israel. Only recently, I was sitting with clients of mine in Netanya who had funds in Liechtenstein and Switzerland. We brought them successfully to Israel. And once the money had arrived, their account manager here in Israel said to them, "It's good that you did this now because Admeva Esrim until you die, but once you passed, it would be almost impossible for your children and grandchildren to have brought that capital back into Israel because they would never have been able to prove the origin of the money in the way that you've been able to." So there's considerable risks in using offshore tax wrappers when it comes to repatriating capital at a later date.
So not only is the advantages in terms what Andy articulated about being simpler structures. Once you've brought that money in and avoided the risk of it being disallowed in the future, there's preferential rates that are available with the Israeli banks. It's a lot simpler, and for many of our clients who are elderly, it's a very, very important part of planning. There's things that are available in Israel, like a continuing power of attorney, which is not necessarily available in all jurisdictions. And it certainly makes for planning for the succession a lot easier once assets are consolidated in Israel. So it's not just about fees, it's about simplicity, and it's about future planning.
Just to add, for those clients that do like the idea of leaving some of their capital offshore, we do work with offshore custodians, but have the advantage of very preferential fee arrangements with them, which is always important. The fifth mistake, which gets back to that theme of home country bias that I spoke about earlier with regards to currencies and the shekel, is also often reflected in the investments that clients have in their portfolios. I work with Australian clients who have the bulk of their money in Australian funds managed by local managers, local property funds. I meet lots of British Olim who have their money in the UK in well-known British companies and in well-known British fund managers. And the problem, of course, is that the world is far bigger than the UK or Australia or Canada or South Africa. The UK, for instance, is about 3% of the global market. So Australia is even less. And that home country bias can result in considerable underperformance. And this next chart really brings it home. Since 2005, the red line is the S&P 500. It's produced a cumulative total return of 394%. That's capital gain and reinvested dividends. Over that same period, the benchmark index in the UK of blue chip British shares, the FTSE 100, has delivered a return of 213% with income reinvested. So the US market has provided almost double the return of the UK market over that period. And it's a similar picture with the Australian and Canadian markets as well. It's a very expensive mistake having home country bias when it comes to currency, and it can be an equally expensive mistake when it comes to having too much money invested in the stock market of the country you came from just because you were familiar with it.
And the solution we believe in this regard is to diversify away from the UK and to be more globally invested with a US bias. Now that US bias can come via a dollar portfolio or a shekel portfolio. Inside a shekel portfolio, we can allocate money to the United States stock market in a hedged version. So without taking the currency risk, we get the benefit of the diversification away from Israel. We get the benefit of access to mega caps like Apple, Facebook, Google, etc., and other very strong companies. But we do it it is possible to buy these type of assets and hedge back to shekel without the currency risk. So when you think about a global portfolio, it doesn't necessarily mean exclusively in a foreign currency. You could still have a global portfolio in a shekel currency.
When you make Aliya, as I'm sure many of you know, for the first 10 years, you're not subject to Israeli income or capital gains tax on the investment returns of non-shekel assets. Doesn't matter where those assets are held, and this is an important point to make, because I know there's a number of advisors out there who are telling their clients that if they bring their money to Israel, they'll automatically pay tax on it. That's simply not true, because non-shekel investments in Israel are also not subject to tax for the first 10 years. But when I meet clients who are making Aliya or who have made Aliya, I often find that they've structured their affairs in a way that means they're ending up paying or being exposed to significant tax liabilities that with careful planning they wouldn't have had to face. And there are several key taxes that fit into this category. So the first would be income tax. As I said, if you've got rental properties in the UK, you're going to be paying income tax on the rental income, even if you've emigrated to Israel. If you hold UK investment bonds, which is a popular form of investment wrapper, the investment returns on those investments are subject to tax within the wrapper. You don't get a tax bill each year, but you're paying tax unnecessarily nonetheless. Third is capital gains tax on the sale of assets. New Olim with non-shekel assets are exempt from capital gains tax for 10 years in Israel, but that doesn't mean you don't face or won't face a capital gains tax liability in the country you've left if your assets have remained behind. British Olim, of course, face the specific issues around inheritance tax. 40% of your assets above the threshold of £325,000 are taxed at 40%. For people, again, who leave considerable assets behind in the UK, this can create an enormous tax liability upon death that could entirely be avoided by restructuring assets and moving where they're held. Spend a lot of time working with clients on inheritance tax planning, both before and after Aliya. What some people do, though, is they make Aliya and they eventually get rid of their UK inheritance tax problem, but they unwittingly create for themselves a US estate tax problem instead. If you hold assets in America, that could be a US investment fund. It could be shares in Apple or JP Morgan or Boeing or Disney or any other big American company. These are known as US situs assets according to American tax law. If you're an American citizen and paying tax in the USA, then your exemption limit for a US estate tax starts well above $10 million. Most American Olim to Israel have nothing to worry about. But if you've left the UK and you hold American assets and you no longer have an inheritance tax problem in Britain, you may well have a US alien non-resident estate tax liability. Again, if you have more than $60,000 of US assets, that will be subject to estate tax at up to 40%. And I've sadly met people who've managed to avoid one set of death duties and merely taken on another instead. The other tax flagged on this list that I haven't mentioned is US withholding tax, but withholding taxes generally on dividends especially. Again, if you hold your American or Swiss shares in a way that's not correctly structured, you are again unnecessarily taking on a large tax liability on all the dividend payments that you receive.
Right, so tax planning and investment planning go together like two hands clapping. If you get the investments right and the tax wrong, then you've been wasting your time. The particularly bad ones are the inheritance tax that Andy explained, and we believe that that needs to be carefully thought through. Next.
So we've spent a lot of time working with clients to help them structure their portfolios and their assets so they're not subject to the kinds of taxes that we've explained. The seventh risk, the seventh mistake, is to use an advisor who's thousands of miles away, not based in Israel, not able to give advice in Israel, not licensed in Israel. Because making Aliya requires in many ways a rethink, a resetting of how you live your life. And as anyone who's made Aliya knows, it can be a long and sometimes challenging adjustment. But having an advisor back in the UK or in Australia or Canada, with no understanding of Israeli tax law, with no access to the Israeli banks as a way of holding assets in an efficient and low-cost way, without the ability to advise on retirement and pension funds in Israel, without the capability to help you invest your assets in shekel to reduce your exchange rate risks. These are all enormous problems that many Olim have faced and paid the price for because they've stuck with an advisor who isn't licensed and isn't regulated in Israel. And you know, the human element, the human dimension of what financial planners do, what good wealth managers do, is to be able to sit with a client face to face across a table to discuss the issues that are most pressing to them, to be there at challenging times in life, to help with transitions and to help deal with the crisis. You can't do that on Zoom, and you can't do that with an advisor who can't get on a plane and come and visit you because they're probably breaking Israeli regulations if they do try and give you advice here in Israel.
Okay, so Pioneer is regulated here in Israel. Andy is regulated and experienced both in the UK and here. Many Olim are not familiar with some of the savings products that are available in Israel, and simply because they're not exposed to it, they're not familiar with the language, or they don't have an advisor who can deliver these things, then they don't have access. And so we're able to do that. The high level of face-to-face service, which you're used to in the UK, you can now have here in Israel. And Andy would be holding your hand, giving you the access to the full range of investments that are available to an Israeli saver. Okay.
Good.
So we received a couple of questions in the registration process. A lot of these questions are very, very specific and regarding tax, individuals' tax, and therefore we're not going to address them here. If there are new questions, let's just have a look at the chat. Our fees. There's a question regarding our fees. And I think that that's something we would handle individually based on the size of the portfolio. As I say, one of the points that we mentioned, that if you use an Israeli advisor without the front end fees, without the house funds, then you're going to come out with a much lower total expense ratio than if you used a UK advisor. There's just one or two questions which could be relevant to everybody. At what point do I need to fill in an Israeli tax declaration? So this, here's some more questions.
So just go to the next slide with my number on it.
Hold on 1 second.
That's it.
Okay. So regarding specific questions, you can contact Andy via email. There's his phone number. Following this webinar, you should be getting an email from Pioneer, so you have our details. When you have to register and submit a report in Israel as a taxpayer, there's a couple of rules, and it's not as obvious as one should think. So it's definitely something that should be posed to a local accountant. You can do that via Andy or directly if you have an accountant. It depends on your level of shekel earnings. It depends on your physical assets, if you own rental property that produces rental above a certain amount. And there's a few lesser known peculiar criteria which would trigger you reporting on your Israeli assets for tax purposes. So that's something to bounce off Andy or a tax advisor.
I noticed a number of the questions were about bringing money to Israel, about banking services, and about taxation. So to say, really, as part of the comprehensive service we give clients, we work with, as I think it said on an earlier slide, all the major banks, and we have relationships with a number of tax and legal specialists who we often refer clients to. So as part of the process, if you have specific tax needs or specific banking needs, that's something we can definitely help you with. But for now, I think we've dealt with all the main questions. One more. There's one more.
So there's a question here about something I mentioned about accessing global investments in shekels, and how is that done practically? If we bought a index tracker, for example, a simple S&P 500 index tracker, which is something we believe belongs in a portfolio, you can buy such a index tracker in shekels. You have the option of a hedged or an unhedged version. We would typically buy the hedged version, as we don't believe in taking currency bets. It's extremely difficult to predict the currency, but the way the portfolio management team decide whether to buy the hedged or the unhedged will be a function of what percentage of the portfolio is currently hedged, which is going to be the majority, and where the current rate is. If, for example, the rate is at 3.6 or 3.5, then we prefer perhaps to take a little bit more currency risk than if, a little less currency risk than if the rate is at 3.10 versus the dollar. So, but it's quite simple to do. We're not buying fancy derivatives directly in the portfolio. We're doing it via an instrument, and there is a small hedging cost to that. It's not a fee that we earn, but it's just the nature of the derivative used to hedge, that type of thing doesn't come for free. But that's something we can discuss with Andy in an individual meeting.
Great, thanks, Mike. Okay, so where do we go from here? Because we've come to the end of the formal part of the presentation. My contact details are here on the screen. andrew@piowealth.com is my email address, or feel free to call or WhatsApp me on the number 054 655 9261. For those who want to perhaps replay the presentation to reinforce some of the points we've raised, there will be a link available, so message me and I can send that to you. We also have a bespoke guide that we've prepared, again, specifically for British Olim, but a lot of the topics are more generic, as are the issues that we've covered this morning. You can email me or WhatsApp me for a copy of that guide. But I know for many people, the challenges and questions they've got really require much more bespoke information and much more bespoke advice. And that can only come from a private, one-to-one, face-to-face either on Zoom or in-person conversation, where we could perhaps delve a little bit more deeply into your personal situation. We can talk about some of the solutions and strategies that may be available that will help you avoid the risks that we've outlined, that will enable you to better plan your finances here in Israel and put you in the direction of achieving peace of mind and financial security. Because at the end of the day, that's really what our role is, to give our clients peace of mind and financial security. So if you'd like to arrange the opportunity to meet up, I will be in London later in February for those that want to meet me in the UK. Please, again, send me an email or a WhatsApp. But for now, on behalf of Mike and myself, I want to thank so many of you for listening in this morning, for joining the conversation, and we look forward to hearing from you soon. Thank you.
Thank you very much.